At the start of the Iran war, energy analysts looked at the numbers and predicted a global oil shock that would effectively ground every flight and darken every major city on Earth. The math of the oil market is rigid. Every 24 hours, the world pulls exactly 100 million barrels of oil out of the ground, and every 24 hours, that supply is consumed. The system is perfectly balanced, with zero slack. When Iran shut down the Strait of Hormuz, that global output immediately dropped by 20 million barrels a day. Losing 20% of the world's energy in a zero-slack system usually guarantees immediate economic collapse. Without that oil, 1 in every 5 factories and power plants simply ceases to function. The world's first line of defense was mechanical. By routing oil through alternate pipelines to bypass the strait, producers managed to recover 7 million barrels. 32 countries coordinated the largest release of emergency stockpiles in history, adding another 2.5 million barrels per day back into the market. Even with those interventions, the world was still staring at a massive 10.5 million barrel daily shortfall. Mathematically, a calamity of this scale should have lasted months, but within weeks, the market stabilized. The predicted apocalypse never happened. Somewhere, a hidden force had stepped in to balance the global books, manipulating the supply and demand curve from the shadows. After decades of relentless growth, China's oil imports suddenly plunged by half at the exact moment the war began. Overnight, 5.5 million barrels of global demand simply vanished. Beijing achieved this through a series of quiet domestic maneuvers, starting with an immediate ban on its own refineries exporting jet fuel and gasoline to neighboring countries. They also aggressively reduced internal oil reliance by spinning up coal plants to full capacity and pushing commuters toward trains and electric vehicles. But even these internal shifts cannot explain a 5.5 million barrel daily cut. No industrialized nation can function on half its supply without drawing from a massive secondary source. China's real secret weapon is an estimated 1.4 billion barrels of oil stashed away in massive silos and underground caverns, a reserve large enough to keep the country running for a year without a single import. Stockpiling that much oil without alerting the world or triggering a massive price spike required a sophisticated geopolitical hack. For years, China quietly bought heavily discounted oil from sanctioned nations like Russia and Iran, moving the forbidden cargo through a dark fleet of tankers that operate outside of international maritime oversight. They processed these trades exclusively in their own currency, the Renminbi. This made the transactions invisible to the US dollar-based financial system and entirely immune to American banking sanctions. By the time the Iran war began, China had successfully built a parallel, sanction-proof energy network, giving them the unique ability to absorb a global shock that would have crippled anyone else. China continued burning through these reserves, even when oil prices dropped low enough to buy new supply profitably. This suggests their move was driven by something deeper than simple economics. Beijing has spent decades obsessed with the Malacca dilemma, the fear that a US naval blockade at this narrow bottleneck could instantly choke off 80% of their oil imports. This vulnerability remains the single most important factor holding China back from a potential military move on Taiwan. China used this crisis to conduct a live-fire beta test, proving to the world and to Washington that their economy is now built to survive a total US naval blockade. For a century, the global energy order was anchored by 3 pillars: the United States, Saudi Arabia, and Russia. This crisis eroded that old hierarchy. The US proved it can no longer guarantee the free flow of oil, and Russia remains largely isolated from the global market. China, meanwhile, demonstrated that it can unilaterally toggle 5% of global demand on and off like a switch. By secretly managing the mathematics of the largest oil shock in history, China established a new level of influence over the world's energy markets, proving that the era of American energy dominance has been replaced by a new, Beijing-centered reality.